Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for joining us. One of the 40 radio stations, iTunes, YouTube, or the show website, commercialrealestateshow.com. Today we're talking about the U.S. office market. Please welcome my next guest, Bob Voyles and Randy Holmes. They're both principals with Seven Oaks Companies. They do development of office buildings and asset management and property management. Gentlemen, thanks for joining us today here in Studio One.
Thank you.
Thanks for having us.
We appreciate it. You know, it was interesting to hear from co-star Walter Page about the investment market. I know you guys are on the ground level there of developing properties and looking at properties for sale and selling assets. What are you guys seeing for demand for higher quality office properties and cap rates out there?
Well, I think we would really echo what Walter had to say. I think the last several years for Atlanta, you've seen some big trades as well as a strong influx of capital. And I think we would also see for the well-located properties in the Atlanta and really in the Southeast, you're definitely seeing cap rates under 6%. For kind of in-town CBD type properties. Suburban a little bit higher, as Walter said, around the 7%. But you're just seeing a tremendous flow of capital, primarily from, really all across the board. You've got the REITs who've been very active. You've got, funds that have been raised, as well as we're starting to see, at least in the Southeast, an influx of international capital, which has been interesting.
That's much more recent phenomenon.
Yeah. So I guess if you considering selling an office property, this might be a good time, right?
Yeah, absolutely. I mean, we're seeing some of the properties that were just picked up 2 years ago are turning around and selling at sometimes 25% premiums over their last purchase price.
Only in America, right?
That's right. Isn't it great?
Well, what about demand moving forward from investors? I mean, you mentioned cities like Atlanta, which I guess from the institutional investor perspective might be considered kind of a secondary market. But are you seeing more interest from those types of buyers be chasing yield and coming to cities like Atlanta around the country?
Definitely. I think as a lot of investors view some of the gateway markets, New York, LA, San Francisco being priced out, they are looking in markets like Atlanta. And what's been good is the fundamentals are now supporting that. Atlanta was a little slow to recover from the recession, but in terms of job growth, Atlanta is now back. And if you look at most of the charts, we're one of the top 10 cities for job growth. And so I think, these investors are going to stretch to pay a higher dollar if the fundamentals can support it. And so now cities like Atlanta in the Southeast really hit that mark.
As you're seeing some of these markets starting to chase the tech growth, the tech boom at Atlanta, aside from all of the other positive benefits, lower cost of living, is that the combination of Georgia Tech, our technology companies growing here, we're seeing just significant influx of capital chasing those kind of deals.
So how do you think that'll impact cap rates moving forward for the rest of this year and maybe in the next year and beyond? What do you think cap rates will do moving forward? I have a crystal ball here if you want me to pull it up. You can look right
magic
in.
8-ball. That's right. I think our sense is that they're going to remain steady where they are. I don't see, we're heading into an election cycle, and I think interest rates are probably going to remain, they are going to go up at some point, but I think for the near term, they're going to remain where they are. So I would see, again, primarily due to the amount of capital that is still chasing real estate, I think cap rates are going to remain at the levels, we talked about.
So you think the slight rise in interest rates is not going to have a significant impact on the value of these office buildings? I mean, what if a year from now we're 100 basis points higher interest rates? It's got to impact cap rates and value somewhat.
Absolutely, and that's the big question mark.
Yeah.
And again, you sort of balance your sound underwriting versus the desire to get capital out to buy an asset. But if rates do tick up, it does put pressure on the exit. There's no doubt about that.
Yeah, and so have you guys seen the same type of demand increases that CoStar mentioned for your assets?
We have, we're fortunate. And again, it all comes back to the fundamentals, right? Location and the sponsorship of the assets. And so we're fortunate to have some well-located properties with investor partners who are willing to put capital into to make deals. And we've had a great run the last couple of years of demand. And you're starting to see in some of the key submarkets around the Southeast a real lack of big blocks of vacancy. And that's finally allowing landlords to put some upward pressure on rental rate, which has been a nice change from the past.
Yeah, so what do you say to the aggressive tenant rep who calls you now, who was very aggressive on a deal 3 or 4 years ago? Come on in.
Well, the funny thing, for us is that we're actually seeing new cost of construction driving rental rates for replacement somewhere, sometimes as much as 10% higher, 10 or 15% higher than existing rental rates.
Wow, so there's going to be some shock for some of these companies come renewal time, right?
Right.
I think so.
Well, it could be interesting too, but for these companies like that have moved up in quality, maybe they've moved from C to B or B to A because of the rental rates were lower. Well, now they may get some little sticker shock, right, when they go to renew.
Well, I think you're right, and the challenge, is that there's limited options, and so I think the advice would be to start early with these companies as they're looking to structure their renewal.
Okay, and these type of rental increases in demand, so it's time to build, right? And you guys are building some spec buildings or have some in the plans, right?
Well, we are in the process of pricing 3 different office buildings. One is much closer, but we are actively out working with general contractors in 3 different submarkets in Atlanta, and we're seeing a combination of construction pricing going up significantly. Because of just the across various markets, condominiums and other projects, apartments, those type developments are driving construction pricing higher. And so we're seeing that along with just the lack of space is pushing rental rates. And because we're going to have to do that in order to achieve the returns that investors are going to want.
It is interesting, just to add to that, there's an interesting phenomenon going on in Atlanta right now. We have 2 major professional stadiums being built for the Falcons and then the Atlanta Braves. And in terms of concrete availability and pricing and labor, it's really put some pressure on that. And then when you combine that to the apartment growth and condos, it has definitely pushed prices higher.
And how much higher are they than, say, before pre-recession, these construction costs today?
25%.
Whoa.
Yeah.
Wow.
No, it is remarkable. We built a Class A office building in the suburban core in 2000, one of the last buildings delivered in that market for about $185 a foot, and that building today is going to cost somewhere around $360 to $370 a foot.
Before tenant improvements?
That's all inclusive.
All in, okay.
That's all
Development
land,
costs, yeah.
development costs,
Okay.
et cetera.
Wow.
So
And you're seeing rental rates that justify that now?
We're having to jump in that market. We're going on a gross rent basis from 31, 32 to 37, 38. So almost a 20% jump.
And what are tenants saying about these rates for these new buildings?
Well, I think that, again, you go back to the availability. And if you have a well-located site where the tenant wants to be, it's all about the ability for a tenant to recruit and retain employees. And the options are limited. And so I think it's our job as developers to educate them early on the process of what this is going to look like.
Yeah. And luckily in the markets where you're working, you're seeing a lot of demand from companies that are looking to move into cities like Atlanta. So hopefully you'll get all 3 of those built, and we're looking forward to it. Well, stay tuned. We'll have more on the office market. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.